Hello everyone. In today's video, I'm going to cover Very Good Butchery. Now, recently I did a video up here where I did a deep dive into this company, and it's traded under the ticker symbol VERY in the Canadian Stock Exchange. Now, it just released Q2 earnings, and there's some great takeaways that I really want to dive deep into this video today. So if you own a position in the stock traded under the ticker symbol VERY, or you're looking to own a bigger position in the stock, then you got to check out this video today because I'm going to cover the key takeaways from the Q2 earnings. Talk about the risks before I talk about the rewards. Then I'm going to dive deep into its valuation. What does it mean for its stock price? And is it still a 5 to 10x bagger company? Everyone, if you want me to make more of these videos for you, hit that like button, smash it, so that I make more of these videos for you. And guys, if you're watching this channel and you haven't subscribed yet, why not? Please hit the subscribe button and the bell notification button so you get the latest and greatest videos coming to you on stocks, on real estate investing, so that you grow your wealth and design your ideal life and, of course, live it. So let's get back with the video. So what is this company all about? The Very Good Butchery, Butcher's Bean, that's their focus. They are focused on plant-based products. They started Victoria a few years ago. They were showcased in Dragon's Den. They got super popular and they've signed agreements with Whole Foods, with Sobe, and they've got a wholesale model to distribute their product to supermarkets all across Canada and into the US. They also have a subscription model, which is how I got the Very Good Butchery products. So this is a good segue into its Q2 earnings. So let's hit that right now. So compared to last year's Q2 earnings, they've soared 395%, which is huge. Now, granted, of course, its sales were very minuscule last year in Q2, and it's exploded because it had a very little number to compare to. But really, I think it says a lot about the company and how fast it can grow. It's hit over $1.1 million in sales in Q2 alone because of their big subscription model, their big emphasis on e-commerce, which is again why I got these burgers in Ontario, because you can't get them in the supermarkets right now. The only way to get them is through their subscription or e-commerce. Now, another big takeaway is that, actually, this is huge. They're hitting 43%. Yeah, 43% in profit margins, which is like unreal. Like compared to Beyond Burger, which has a profit margin of only 29%, they're hitting in Very Good Butchery 43%. This is like huge profit margins because their goal was actually only 34%. So they've killed it. They nailed it. Another big takeaway is that they are ramping up production in Victoria. Now, in my video up here, I talked about them ramping up to maximum capacity of 7,500 pounds of product every single week. Well, they just announced they're soaring and ramping up production to 19,000 pounds per week because they have a very good problem, which is that they can't meet demand. So that's why they're emphasizing on growing really fast. Another big announcement is that they are leasing a 25,000 square foot facility in California, which actually doesn't require a lot of renovation. So basically, they said in a few months, they are going to be able to ramp up production and distribute their plant-based products all across the US. And this facility is huge. It can produce up to 550,000 pounds of product every single week. I mean, let's just put that into comparison. They said they made $1.1 million of revenue in Q2 solely based on producing from their Victoria facility. Now, they just added a California facility that's growing that could produce up to 550,000 pounds of product every single week. So I think this is huge. Hey guys, before I jump into the valuations and review its stock price and revenue models, and of course, most importantly, whether this is the next 5 to 10x bagger company, I got to talk about the risks before I talk about the rewards. The number one risk I see in this company, well, it has no track record. I mean, this company only started a few years ago. It's just started really amplifying production through its e-commerce, through its wholesale business, through its restaurant model, and is just constructing facilities in three different locations. But it's still a speculative stock. It has no history behind it. And so it can be a very volatile stock. So fair warning, you guys, I'm not your financial advisor. This video is all for entertainment purposes. I'm just someone on YouTube who talks and loves talking about stocks. So please, if you're going to make a position in this company, please use your best judgment. Number two, we see more and more competitors that can totally get into this space. And we see it already. We've got the most obvious one, Beyond Burger, who is taking up a huge market share. Now, of course, it is a huge trend right now. We're looking at its infancy right now, like a $25 billion market approximately. But again, Beyond Burger is taking up a huge portion of the market share. We've got also Maple Leaf with their Life, and then we've got Guardian. All these competitors are all producing these vegetarian plant-based products. So it's got a lot of competition for very good butchery. Now, number three, the other big risk is the delivery model. Now, as much as I got a hold of these products in Ontario because you can't get them at the supermarkets, I had to wait about 3 to 4 weeks for this product, and I ordered it in pretty much the same time I released that last video up here. So all I'm trying to get at is that it's taking, because it has a very good problem, which is it can't meet demand, it has trouble delivering its product all across Canada. Now, the good news is that they got agreements with some three logistics delivery models to really supercharge the delivery across Canada, but we haven't seen the results yet. So all to say is that it's got to get its product out as fast as possible. People are not going to be as patient like me waiting 3 to 4 weeks to get their product. Okay, number four. Now, as much as the management team is super ambitious, super driven for growth, they are very young because they just started this company a few years ago. So they have yet to prove themselves. A couple risks that I see imminently for them right now is construction delays, production delays, scaling delays, potential funding problems. So again, with any kind of startup company, I mean, they've got years ahead to prove themselves. So this is a number four risk, which is their management team. So we're going to jump into the last part of the video, which is diving deep into the valuations and my opinion of a future price target for the Very Good Butchery, which is traded under the stock symbol VERY. Now, in my video up here, I had predicted a revenue target around $5.5 million to $7.5 million every single year. Now, how did I get there? I got there because I ran their production rate, which is based on 7,500 pounds of product, of plant-based products every single week, and they're hitting it every single week, and they're able to, on average, sell these products at $14 per pound. And if you ran that, then their revenue model could be between $5.5 million to $7.5 million. I gave some optimism in there. That's why I hit $7.5 million. Now, I just gave you a bit of insight when I talked about its Q2 earnings, how the Victoria facility has ramped up production from 7,500 pounds up to now 19,000 pounds of product every single week. Now, it hasn't hit 19,000 pounds, but that's their target over the upcoming months. As well, they are also ramping up production in the California facility, which only requires minor renovations with a maximum production rate of 550,000 pounds of product every single week. So without even running any numbers, if I ran my revenue model just based on the Victoria facility, it's definitely on track within a year to hit $5.5 to $7.5 million. Now in Q2, it already hit $1.1 million. So I think that I'm sticking with my growth thesis, which is they can hit $5.5 million to $7.5 million within 1 year, no problem, because they got the California facility and they got the Victoria facility ramping up production. Now, Now you're probably thinking,
That is super ultra conservative, Tracy. You just talked about its production rates like doubling. That means they're going to double the moolah everywhere. So they're going to be producing a ton of product. They're going to sell it across the US and Canada, and they're going to get way more cash, way more revenue.
and you're right, it's true. I ran a very ultra conservative model because you never know. They might have scaling issues. They might have production issues. They might have ramp up time issues. They might have trouble retaining staff. I mean, they can run into a bunch of problems. So that's why I ran an ultra conservative model of 5.5 million to 7.5 million of dollars of revenue within a 1 year span. Now, if you extrapolate this and just say, assume that the California facility is up and running within the next few months, the Vancouver facility, which they've already retained a site and has said they're going to start construction by the end of this year, plus the Victoria facility. Now, let's just assume each of the facilities only produce on conservative, the equivalent of the Victoria facility. So I just said, if the Victoria facility only has production rate of 7,500 pounds of product every single week, and we assume that they ran into scaling issues, they ran into like production issues, they ran into not being able to get all their staff up and running within the next 2 years. So let's just conservatively assume that they only get revenue of 5.5 million per facility. So 5.5 million times three times revenue multiple equivalent to Beyond Burger, which is running at a revenue multiple between 18 to 22x, they can definitely hit $16.5 million within 2 years if these three facilities are ramped up, not even to full production rate. I just went like ultra conservative with a production rate as if they're running it like right now with each of these three facilities. So if they could get 15.5 million within the next 2 years, I'm looking at a stock price about $3.78 plus in the next 2 years, which has got some huge upside right now because it's trading at around, I don't know, $1.60, $1.74, up and down. I mean, this is going to date this video. All I'm getting at is that it has 100% upside to this stock price plus. Now, to put this into perspective, Beyond Burger had $110 million in sales in just 1 quarter. Maple Leaf, which is also has a lot of plant-based products, had $60 million in sales in 1 quarter. So that's why I was saying 15.5 million for Very Good Butchery is like minuscule. They have amazing amount of room to grow. This is a $25 billion industry that's in its very baby infancy stage. So it's got a lot of room to grow. I think that with the huge demand, with the huge growth, and the huge profit margin, they are well positioned to take a bigger and bigger market share across Canada and the US. So, what are my thoughts about the position I have in Very Good Butchery? So, right now, I own 1,000 shares of Very Good Butchery. I bought it at an average price point around $1.20. Now, it's obviously gone up since then, around $1.60, $1.70, up to $2 at one point. I'm looking to hold on to it. I'm waiting for a bit of a pullback, which I'm that type of investor where I like to see some consolidation in its stock price. Now, one thing about the shares with Very Good Butchery is that they're going to continuously raise funds in the future quarters. Now, one good news is that they got this big company that has invested and bought a bulk order of Very Good Butchery at $1.30 per share. So basically what it's trying to say is this investment fund is willing to buy its share at $1.30 with an option to buy more in the future for $2 per share. So that gives you a bit of intel on what type of target price you might want to look into in buying Very Good Butchery. So for me, I'm going to get more of it. It hits $1.30. This is a very volatile stock. So then I get more room with bigger returns in the future because I love high returns on investment. If I'm going to make an investment on a speculative stock, I want high returns. So hey everyone, I hope you found this video super helpful. If so, give me a thumbs up. And hey guys, let me know, what should I do in the next video? I was thinking of doing a video on TD Bank Let me know if you'd be interested in getting a video on TD Bank, given the situation that we're in. Anyways, I'll see you in the next video.